Hey there, welcome to VIP Financial Ed YouTube channel. I'm your host today, Michael Matthew. We've got a quick little video to share with you guys today. We kind of turned it into a little bit of a case study. So we often talk here on the channel about getting into side hustles, doing other things that are going to contribute to ultimately getting you multiple streams of income. We talk about a lot of those here on the channel, but there's also things you can just kind of do in your day-to-day life. It doesn't have to be some amazing business opportunity out there, but you are looking to maybe put some capital that you've already got that's not really getting a high return or yield on it right now. And you might want to be able to play around with that and do some maybe smaller projects that you might be able to get in and out of. So what we're going to do is we're going to take the case study and then we're going to compare it against if that same amount of capital were kept in a low interest checking account for 12 months. So there's been a lot of talk about Twitter. It's been all over the news here for really about the last month. It still kind of seems like it's up in the air. But when all of the news broke about Elon Musk taking on that much larger position, he had sold off some of his Tesla shares. And at that point, he was just shy of owning 10%. So what I wanted to do was just take a look at what the effect on that stock was going to be in just a very, very limited window. Anytime a guy like Elon Musk is attached to any type of purchases like that, obviously there's going to be a ripple effect. Could be negative, could be positive, of course. And that's kind of part of the gamble with stocks. I'm not a huge stock guy myself, but I wanted to play just a quick position in this. And really what I wanted to do was I wanted to really mitigate my risk. I wanted to limit my exposure. The amount of money that I was going to put in it was literally going to be for 24 hours. And I was going to see what that return was going to look like. So I went in with realistic expectations. I also knew that even if the stock jumped, I wasn't going to make a ton of money. And if it dipped a little bit within that 24 hours, I wasn't going to have some huge losses as well. So pretty safe bet either way. So what I ultimately did was took $25,000. That stock was trading at $44.79 at the time. So I picked up 555 shares, obviously not some huge position. What ultimately happened was, and I stuck to my guns on it. It didn't matter if it was going to go up or down. I was going to sell off in 24 hours, which I did. And out of that $25,000 capital deployment into it, the investment returned $1,400, which was a 5.6% return in 24 hours, guys. Now, the question you could automatically be asking yourself is, yeah, that's a great return. Just within 24 hours, getting the $1,400, getting, just shy of 6%. Had I held on though, there would have definitely been some uncertainty. So I wanted to get in, I wanted to play, I wanted to get out right away. My hunch was correct. Obviously it could have dipped as well. It did not do that. If I would have kept that same $25,000 in a 0.003% checking account, that same 25 grand would have been $58 at the end of 12 months. So I was in and out, made $1,400, just shy of 6%. Same money in a low interest checking in 12 months would have made less than $60. So guys, I'm not saying get super active in the stock market. That's really not the moral of this video, or the point of this video here today. Is it's just about being aware, keeping your eyes, your ears open. There's going to be opportunities all over the place, whether it's in the stock market, ways to get involved early in a business, sometimes without cash. You can get into some things for, kind of that sweat equity position. So it doesn't always take a substantial amount of money to create revenue streams. But if you do have some that's kind of sitting, I would call it dormant in a checking account, and you do some research and you're out there staying ahead of the trends that we always talk about, take a risk, but minimize your risk by putting a cap on it. So regardless of it goes too high or too low, you know that you're in and out in a finite amount of time. That's what we did on this case study here today. Hope you guys enjoyed some of the information. If you want more like this, go ahead and smash that thumbs up button below. That helps out our ever-changing YouTube algorithms. If you're not a subscriber already, go ahead and subscribe. We always bring content like this here on the channel. So stay tuned for the next video. Until then, take care and make it a great day.